I want to let you know that the median sale price for all of July is actually just over $400,000. So this graph is how many new listings came to the market this month. And in the 200 to 300 being squeezed, it's being compressed so much that there's just not enough to be sold. Sold listings are down. Why aren't homes selling? But that's not the case. It's not that homes can't sell. Months of supply broken down by price point. Where are we getting squeezed the most? It is in the $200,000 to $500,000 price range. The supply in the Milwaukee metro housing market is unbelievably low and has been for quite some time. I'm going to show you in this video the statistics of what that looks like, why it is that way, and what that means for you as a buyer or seller here in Wisconsin. Now, my name is Jacob Sheets, your Wisconsin Realtor, and in case you're new here, we like to cover the entire state of Wisconsin, me and my affiliated agents. You can go ahead and click on the link both in the pinned comment and the description so that whenever you're ready, at the time that's right for you, you can get connected directly to our calendars and schedule a buyer consultation or listing consultation to get you moving into your new property. And the only thing that I ask of you beyond that is to subscribe and ring our notification doorbell below so you don't miss any of our future videos. Okay, let's dive into the August update for the Milwaukee metro housing market. Here are the July housing stats for us to take a look at. I want to let you know that the median sale price for all of July is actually just over $400,000. The active listings are down 25%. Well, what does that look like here? We're down about 900-ish homes. So with that being said, from 3,400 last year to 2,500. And quick reminder alert, if you watched any of my videos, the only two levers we really even care about are supply and demand. When those go up and down, they impact our decisions on how we approach the market. So we can see here, supply, what is this saying, went down about 900 listings from year over year. I like to give you the information first, educate you the same way how I operate my business, and then allow you to make that decision, but also advise you on what I think the best route is while you make the final call. So we're down supply, so right, supply is going down about 900 properties. It's down 25% from last year. That's a pretty significant hit. And then right here, we're down about 400-ish properties sold. So what does that say? That means that there's less supply here being gobbled up. So technically that means supply would be going up a tiny bit, right? So without seeing this here, we would think sold listings are down. Why aren't homes selling? But that's not the case. It's not that homes can't sell. It's the fact that there is just nothing left to sell, right? So that's the reason why the sold listings are down. And since the sold listings are down only 400, but the active listings available are down all the way at 900, that means that we have less that's on the market at the end of this month compared to last year as well to actually pick from, making less inventory available. Our median price per square foot is up from 185 to 197. That's up 6.7%. Months of supply, we're at 1.7 months versus 1.9. As a real quick reminder, a balanced market in the past, the norm would say about 6 months of inventory. Economists are saying anything from 4 to 6 months is a balanced market. So what that means is there's 100 houses on the market literally right now and 100 houses sold last month. We would only have 1 month left until all the inventory was gobbled up and gone, right? So this is saying that our supply, months of supply is 1.7, meaning that the leverage still lies with the seller in majority of the time, and buyers are probably going to be in competition when writing offers. Median days on market, 15 compared to 17. That means in 2 weeks, 15 days on market that you would get an accepted offer on your property. So things go by really, really quickly. So let's start broad and then narrow it in one step at a time. We were looking at all properties in Milwaukee, Washington, and Waukesha County that are single family or townhouses or condos. And we can see here the quick facts and the table of contents as we go through. I'm going to be stepping on just a few points here to make it nice and quick and easy to digest for you. If you want the real big picture of everything going on, you can pause the video now and take a look at all these stats, but we're going to go in a little bit more detail. So this graph is how many new listings came to the market this month. Not how many are currently available for sale, but new ones that came on the market. People that are deciding, I'm going to list my house. So last year was right around the 2,500 range, and now we're all the way down to around 1,700. which as we can see, but going back, July here is usually up in this higher above 2,000 range for a normal trend. So what that means for you is that there's less new inventory coming onto the market, and the main reason why is that interest rates are higher and prices are so high, demand is so high. People, one, don't want to have to get into a new interest rate that is higher than what they're used to, and two, they're afraid they can't find anything, right? So they're not listing if they don't have to sell. Real quick, here is the pending sales. So we're still pretty high compared to these normal markets here. If things weren't getting under contract and no one was buying a house anymore, we would see this line plummet down here, right? So if homes weren't being sold at all, and there wasn't anything under contract to get to closing, then, well, that means that this would be a lot lower. This means that there's still very strong health and demand that's out there. Is it the supplier demand lever that we're looking at here? This is the demand. It's saying demand is still very high because there's lots of things under contract. Okay, we just learned that the demand is still very high, but the supply is very low, and we can see again here, this is the amount of closed sales in July, which is usually one of the hottest times of the year, right? We're usually right at this peak or a little bit past that peak. Right here, we're past what looks like the peak of the year, but the peak went all the way just to around 1,700-ish, maybe 1,600, and is now back at or below this 1,500 point, which we don't see almost ever happening this early in the year. Like, this kind of comes a little bit later in quarter four, the beginning of quarter four here, but man, this is like really, really low. And again, as a reminder, is the supplier demand. This is saying the supply is so low that there just wasn't enough to get closed compared to prior years. Now, days on market, how long are listings lasting? We can go ahead and see here. This is pretty average or pretty usual, is that every single year during the time on market, things get gobbled up really, really quickly in the spring and summertime, and then go back up during the late fall and winter time. Things sit longer because no one wants to move in Wisconsin weather in the winter. It's just a fact. So that's pretty normal for trends, but it is very low compared to all these other statistical years in the past. But I mean, like, all this is telling you in super short, stuff does not last. It is going very, very fast. The thing you've been waiting for, median sales price. Woo-wee! Look at this bad boy. We're at the $340. As a reminder, this is including condos as well. Wow, that is just up right here. We can see from the 315 year prior and 289 the year before that. Man, that is just crazy. As we can see here, this sales price going up, up, up. We kind of see a little bit of an increase each year here, and it's slowly going up. But then these past couple of years, 3-4 years, it just is really, really steeply climbing. So, I mean, with that being said, you can kind of make your own speculations on how long it's going to last at this point. But as long as supply and demand are still so out of whack and so crazy, we won't see a correction. People are going, it's going to crash right away. It's going to crash right away. Nope, not soon. I mean, will things cool off in the future here? This doesn't seem sustainable to me to keep going up, up, up this crazy fast. But right now, like with the supply and demand so out of whack, it's going to take time to get back to here. And that's just a fact. I mean, unless crazy things happen, to just go, and switch completely, it's just very, very hard to believe. So with that, what should you do with that information? Be cautious, right? Don't be frozen in fear and not make any decisions at all, but really think out your decisions when you're going to be buying or selling and go, okay, we need to talk through this. How long am I going to be here for, right? Is it 1 year, 2 years, 3 years, 5 years, 10 years? If you go really far out in that 10-year time range plus or anything, it's very likely that this won't impact you very much. If you're kind of in this, anywhere from this 1 to 3 year range, and you have a very, very, very low down payment, you want to be extra cautious. Just really extra cautious. Your first time buying a house, make sure you take care of yourself. And if you're overpaying or anything like that, just be aware that, things can adjust a little bit. So even if they kind of level out or go down, if you're going to sell again in a year or two, it might be kind of tough to recoup some of that overpayment you're going over an asking price. But if you need a house, you need a house, and that's just sometimes how it's gonna happen, right? So with that, be cautious, but don't be frozen. Okay, there's a big difference in that. And now at the average sale price, right, the 400,000, as you can see, that's never happened. I mean, down here in 2015, we were down at below 200,000. That's over double where we were at before. I mean, that, again, like I said, long term, that type of growth does not seem crazy sustainable to me, but it is going to take some time for supply and demand to adjust and level out or potentially decrease slightly as time goes on. Now, list to sale price ratio. totally normal with what's going on in the market and the cycle for the annual cycle. We can see right here it's starting to dip down post plateau, and that same thing is here. It already dipped down post plateau in July from last year. So we're a little higher than usual, but nothing that's out of the ordinary. I mean, it's kind of crazy that this has become the ordinary, that you list your house and during the early summertime, late spring, you're going to end up closing for 104% listed sale price ratio, meaning that if you listed your house for easy math $100,000, you would on average be getting $104,000, right? Which is just crazy that that's the norm. So although it is still very, very high, coming in at the 103%, it's higher than last year. But that being said, it's still on our normal trends that we see every single year. Inventory of homes, supply or demand lever, right? This is the supply lever. So we can see how much supply there is. It is just rock bottom. In order to cause a shock or a crash, it would be monumental amount of effort to do that. Piggybacking off of the actual amount of homes for sale active on the market is the months of supply. So we can see here we were at 1.8 2 years ago, 1.9 now 1.7. That's just really, really crazy low. But you can see here the whole, we have this dip here at the very end of quarter 4, dip here quarter 4, dip here quarter 4. So we can kind of see coming up it'll probably be a dip again, but these past couple of years, if you were to just average it out, you average out of saying we're at and have been steady at around 2 months worth of inventory at this point. Now, a lot of you liked in my last one, I did a breakdown by price point as well. So let's take a little bit of time here and go down by price point and see what's going on in the Milwaukee metro area by price point as well. We have all properties together is the 400,000 as the average sale price. Single families are up higher at 419. Wow, man, talk about wild times, right? And townhouses and condos are at $324,000. We can see here the median sale price as well. Another way of measuring it is 340, 360, and 270. We can see the closed sales here by price point here. Everything we've had a decrease, and the 0 to 100, 100 to 200 is taking a huge hit, meaning that there's just not a lot, not enough to close compared to last year as well. And in the 200 to 300, being squeezed, it's being compressed so much that there's just not enough to be sold. And also 300 to 500 is also being compressed, not quite as bad as your 2 to 300. There are buyers that I have that are looking for places for borderline years, and they just are waiting for an option to come up, right? Any option. Here we're seeing at the $500,000 to $700,000 price range, it's not being compressed quite as hard. So things are still moving, things are still closing at a regular pace, but there's less closings still than these price ranges. So that interesting way to look at this is that this chart here is showing you what the impacts of supply was by the closed transactions. And when we scroll down here is the actual pending sales, right? So in July of this year versus last year, and we can see especially in this $300,000 to $500,000 price point, and right here in 5 to 7, is that there's more pending sales. What does this tell us? This tells us info about supply or demand. It tells us about demand, right? Because if things are being pending, that means they're getting under contract. And if they're getting under contract, it means that buyers are wanting to buy. So these buyers at these price points is right here are still very competitive of wanting to buy these homes. So what you have to expect from a buyer perspective, if you're getting into the market right now, is that you might have some good amount of competition that's out there. And then also from a seller perspective right here, that there is not quite as much going on in the market that is going to be competing against you going into the winter seasons. And to go real quick on days on market, we can see all across the board is pretty much everything is going down for days on market. Basically, things are going very, very quickly. You can see right here is 201 to 11. That's a huge delta, but keep in mind when you get to the mega luxury here in the state of Wisconsin, 3 million plus is kind of that mega luxury. There's not a lot of survey size there, so this gets skewed very, very quickly. Looking at the list to sale price ratio, almost everything is gone up from before, but basically homes on average are going at or above list price. Inventory by price point, this is everyone's favorite slide, right? Because it can show so many of the emotions of my buyers that are out there right now. Even from last year, we saw those graphs going up and down from a bar graph perspective by price point. You can see how squeezed, tight these people are getting. They have nothing to pick from because this is kind of the masses right here. The majority of the people that I'm working with that are first-time buyers, that are downsizers. They want a home in this price range of anywhere from the realistically $250,000 to $400,000. And when they can't get that, the reason is because there's just so little to pick from, and it's been a huge decrease year over year. This is just from last year, right? Which is pretty crazy. See, I've had really some unrealistic seller expectations when I've talked to them in the past, going, things are flying off the shelf nonstop. Well, if you go back and just look at the statistics from my last graphs where everything is mushed together, you can kind of see, oh yeah, that's going down, down, down in supply and up, up, up demand. What is this telling us? In this luxury price range, it's pretty steady on supply and pretty steady on demand in general, right? So with that being said, if you're in that luxury price point and you're a seller, expect things not to necessarily automatically fly off the shelves. You're a buyer, expect that, talk with that listing agent to see what's going on, so you're not just throwing money away when you don't need to overbid. Last but not least, months of supply broken down by price point. Where are we getting squeezed the most? It is in the $200,000 to $500,000 price range. We're at 1.4 and 1.3. So if you're in that price range, expect high competition. Now, if we go back up over here, remember what a balanced market now economists are saying is that 4 to 6 months. We can kind of see here in this $1 million range, we're still technically kind of a seller's market, but not like, you set all the rules, you do whatever the heck you want. And when we're in this higher end price range, we can potentially have more of that negotiation from the buy side. So after seeing everything, all the statistics, what do you think? Are we heading into impending doom coming soon where we can buy discount properties? Or are we in for another year of tough competition and escalating prices? I want to hear your thoughts and why below. Do you agree with my thought process or do you disagree? And while you're down there in the comments, if you do want to talk to me or my other affiliated agents in the entire state of Wisconsin, that is in the pinned comment or in the description to get directly on the calendar for a buyer or listing consultation with me or any of my affiliated agents in the entire state of Wisconsin, whenever you're ready to get started with the conversation. Before you go, make sure to hit the subscribe button and ring the notification doorbell below so you don't miss any of our future videos. Thank you so much for watching, and I look forward to seeing you in the next one.